Solana chose Rust as their core programming language. And the reason that this is important to me is that there's already Rust developers. There's tons of them. Rust is a systems level language that's been around for many years. And most importantly, there's a community of developers behind Rust. And so anytime an L1 creates a new programming language, or any technology creates a new programming language, you're introducing friction to getting developers to adopt it.
Hey, Joe, welcome to the Open Metaverse podcast.
Hey, thanks for having me.
Joe, to kick things off, why don't you tell our audience a little bit about yourself and your crypto origin story?
Sure. So I've been a technologist and a trader going on 23 years now. I've kind of spent the majority of my career flip-flopping between, finance and tech. I used to be a trader on Wall Street a long time ago, and then got, into tech full-time, joined a startup, and then within a few years launched my own startup called NodeSource, which is the Node.js company. It's an open source enterprise infrastructure company. Bootstrapped that business and raised over 40 million in venture, sold the company in 2019. I actually got active in crypto in 2016, much more active in 2017, given the bull market. And I just had never really seen a market kind of so dislocated in my life. You just had these, 10,000 basis point arbitrages lasting for weeks. But in addition to that, crypto was very much the opposite of Wall Street. It was open. And that was very consistent with my philosophy on software in general. And if crypto was going to kind of be the digitization of money and value transfer, it made sense for a lot of the stuff to be open and open source. So I actually, in 2018, I moved out of the CEO role of my company into the chairman role and took some time off and started writing some quantitative and systematic trading strategies for crypto. Got recruited to join Passport Capital, which is an institutional hedge fund in San Francisco, to run their quant and systematic trading desk for crypto. So did that for a bit, left in 2019, primarily because it's just really hard to trade crypto at a US-based hedge fund. Even today, it's still very difficult. So back in 2019, you can imagine the challenges. And, I spent a lot of time doing R&D in crypto and Web3 at that time. So, whether it was digging into the Ethereum community, it was writing Solidity-based applications, understanding that developer ecosystem. One of the benefits to running an open source business is you have to get really good at understanding what makes developers tick, particularly in open source ecosystems and communities. And so, checking out the Ethereum community, checking out the Cosmos community, and then ended up investigating Solana. Was very early to Solana, very fortunately early to Solana, but it wasn't just because I was lucky. It was because I actually read the source code, evaluated the technical architecture of the protocol and the network, and looked at the team behind it. Anatoly is probably one of the best distributed systems engineers on the planet, certainly in the top 10. I would say. And so, kind of looked at what they were doing and thought to myself, wow, if this thing could do what they say it can do, it's wildly undervalued, and the project will probably have a lot of momentum behind it. So kind of fast forward a couple of years, I ended up getting recruited to join Microsoft in their cloud and AI organization. And my job loosely was kind of to help them not miss the next big thing. So you can imagine I spent a lot of my time doing R&D in crypto and Web3. And ultimately left in 2021 when late 2021 because I was approached by a close friend of mine. It was a very successful VC named Steve Jang to come run a crypto fund at his firm, and I politely declined because I'm an entrepreneur. If I was going to do a fund, I was going to do it myself. And he said, I knew you were going to say that. Let me help you launch a fund. And so we had some discussions, and he said, oh, by the way, I preemptively kind of pitched you to Mark Andreessen and Chris Dixon, and they want to be the first money into your fund. And I was like, well, how do you pass that up, right? So I launched Asymmetric in 2022. Asymmetric is an investment firm where we kind of run it like a technology company, but we are an investment firm. So we have an early stage venture capital fund that invests in pre-seed, seed, sometimes Series A, but basically first check in into crypto Web3 related companies and protocols. And then we also have a discretionary long short crypto hedge fund. So it's not a long only fund. It's purely a fund that we're looking to generate returns based on our current views and how we want to express those views, whether they're long term or short term, etc.
So quite a journey. I think you have established that you're a polymath. So Joe, you mentioned Solana, and you also mentioned that you looked into it from a deep technical architecture as well as source code viewpoint. So from an architectural standpoint, can you decode for our audience why Solana is unique and scales well?
Yeah, sure. So, I think it is intimidating to try to read this Solana code base. it's some black magic underneath the hood there. So what I try to do is I try to use metaphors or analogies to explain the difference between Solana's approach to being an L1 versus what most people are familiar with, which is Ethereum. So the easiest way to think about it is if you think about your computer, you have a CPU and a GPU in there, and over time, CPUs started to really improve on their performance because they were able to execute instructions in parallel, right? So instead of something being what we call single threaded, right? Just it can only do things in a kind of like a sequential order with one process. You could have maybe like 4 things happening at the exact same time. And this is just a very, common approach to increasing the efficiency of something and the speed of it by parallelizing it, right? If, for example, you walk into, I don't know, a coffee shop and there's one cash register to go up and, buy your coffee, well, then there's going to be a queue of people all waiting to go to that one cash register. Whereas if you have 4, you have people all walking up, you can handle 4 times as many customers. That is the kind of very high level as it relates to why Solana is highly performant and it can scale at the capacity that it can. It operates in a way that allows for the parallelization of transactions to be executed at the same time. And the reason this is, I think, novel and unique is that no one else is doing it this way for the most part. Now, I should say, with a caveat there, some of the new Move language-based chains like Sui and Aptos have similar characteristics, which makes sense because Solana did it first, right? Like they're saying, wait a second, we should actually just utilize what we know to be, common in computer science for quite some time, which is parallel processing. And so Solana's approach to it, why I was kind of intrigued by it, is it followed a similar pattern of just technology in general. Over time, things get faster and better, and the parallelization pattern was very clear to me. It's not a judgment against Ethereum's approach. I mean, Ethereum, candidly, was a huge leap in computer science, the first smart contract platform ever, right? But the design didn't necessarily enable out of the box this kind of parallelized approach to handling transactions. So let me kind of like break down parallel transaction execution, if you will. So if I want to send you, Mehdi, a token, like I want to send you some USDC, well, I have a wallet, you have a wallet, we have wallet balances. That transaction, these 2 wallets, have to kind of be involved in the same transaction. So conversely, though, if I'm sending you a token and Bob is sending Alice a token, well, me sending you a token doesn't affect Bob and Alice, right? The state of those wallets are exclusive. There's no reliance or dependency on what happens with Bob and Alice's wallet with respect to Joe and Mehdi. And so Solana embraces this and says, hey, as long as like the global state of the chain isn't impacted, we can execute those transactions at the exact same time. And so it's a very kind of simplistic way of thinking about parallel processing on Solana. And it is one of the reasons why, at just a very fundamental level, it is simply able to be, a high throughput, low latency blockchain.
And so, because of this, Joe, it also scales vertically. Like as the nodes become more powerful, and as time passes through, it can process more. Is that correct?
That's right. There isn't a hard cap, so to speak, on like, oh well, if you have 1,000 validators, each incremental validator added doesn't improve anything. It's actually not true. The way that the network has been designed is that as you add more validators, it doesn't necessarily decrease performance. It just improves decentralization. And I think this is another unfortunate, bit of FUD that you hear around the Solana ecosystem. Is like, oh, it's centralized. There's only a handful of validators, or they're controlled by these people. It is utterly nonsense. If you look at the actual data behind it, you can see that Solana actually has thousands of validators that are geographically distributed all over the world, and has fewer validators running in, say, Amazon Web Services data centers than Ethereum. And so, I think one of the things that I try to highlight to folks is like, look, you should, truly be skeptical of any L1, especially one that suggests that they're going to be super fast and performant, et cetera. But the data doesn't really lie. And so when you look at how all these additional validators are being added to the network, you can see empirically that it is becoming more and more decentralized. And so one of the, I think, benefits to being a Solana bull, I'm not a Solana maxi, but I am a Solana bull and have been for quite some time, is that every single aspect that I think a lot of folks that are trying to discredit Solana have just been proven time and again to be false. And so if you're thinking about, as a developer building on Solana, we've had incredible reliability since some of the bugs have been fixed over the past couple of years. If you're an investor looking at Solana, I think you can also, surmise that the majority of the negative kind of headlines, if you will, are empirically proven to be false.
So, Joe, you mentioned one of the reasons why you are a Solana bull is, in essence, because of parallel execution. But Aptos, Sui, and Monad, they also have similar ability. So, is it kind of safe to assume that you also like these systems?
Yeah. So, I like Ethereum too, right? I think the question really is as a developer, and again, my background for 20 years is understanding, developer ecosystems and kind of the tech community. Certainly the past 15 years, I've been deeply involved in open source. My experience in that has provided me, I think, a somewhat unique investment view, if you will, into things like L1s. And so one of the challenges, and this has to do with Ethereum and Aptos and Sui, is that as a developer, well, if I want to build on Ethereum, I need to learn a new programming language. I need to learn Solidity. As a developer, if I want to build on Aptos or Sui, I have to learn a new programming language, Move. And developers learn new programming languages. That's not new. But the point that I'm identifying is that Solana chose Rust as their core programming language to build, smart Solana programs, aka smart contracts, for Solana. And the reason that this is important to me is that there's already Rust developers. There's tons of them. Rust is a systems level language that's been around for many years, that's battle tested, that has loads of tooling, security capabilities. The language is constantly improving. And most importantly, there's a community of developers behind Rust, as well as best practices and patterns that already exist. And so anytime an L1 creates a new programming language, or any technology creates a new programming language, you're introducing friction to getting developers to adopt it, right? And I think that is the key kind of another key component as to why my investment thesis on Solana was higher is that, yes, there's all these amazing kind of performance characteristics, but the way that they're going to market to target developers is very thoughtful and in line with how these things have worked in the past. So as new technologies kind of sprout up, the ones that require a new programming language to be learned tend to not do as well as those that are adopting a well-known and kind of battle-tested programming language. There's an example of this that, the engineers at Google are some of the smartest software developers on earth. That is, I don't think that's a, controversial statement to make. And Google many years ago released this framework called Dart, and you had to learn a new programming language more or less to use it. Well, Dart never took off. And if a company like Google, which literally prints money every single day, it can plow millions and millions and millions of dollars into promoting, a new technology and trying to get developers to adopt it, and it doesn't work, it kind of raises the question like, well, why would that all of a sudden be the case for Aptos or Sui? Why would that all of a sudden be the case for something like Solidity with Ethereum? Now, granted, again, Ethereum was first, and so there is a critical mass behind that. And candidly, the venture capital community has poured an unbelievable amount of money into that space that it's going to have to work, right? But again, as I zoom out and say, well, I didn't do Ethereum's ICO. Where can I invest now that makes the most sense? And I go back to a very simple principle, which is if you want to make money in tech, follow developers. And if developers are adopting a new technology, there's value there.
So, Joe, I want to shift gears a bit. You mentioned, we know Solana is an integrated / monolithic chain. What do you think are some of the hidden costs of being a monolithic or integrated chain versus, let's say, being a modular chain?
Yeah, this is a debate that's been raging in software development for, I would say, close to 45, if not 50 years. And so to answer the question, let me kind of zoom out historically. There's this concept of a monolithic application or monolithic architecture versus what we call a service-oriented architecture. And this service-oriented architecture is consistent with the modular, blockchain kind of hypothesis, if you will. This is not new. This argument or this kind of debate around which one is better has been around for decades. It's just now being applied to blockchains. And so I think the natural progression of the modular debate has stemmed from the fact that a lot of what has been the challenges, I should say, associated with the Ethereum ecosystem has to do with its scalability issues, right? This is not a judgment against Ethereum. It's just a physics problem. It's not designed to be a high throughput, highly scalable and performant chain. So what inevitably happens? Well, the Ethereum community has more or less said L2s are going to be the way that we end up scaling Ethereum, at least currently, right? There's proto-dank sharding, and that is incredible, kind of academic engineering exercise, which may or may not come true. But as we sit here today, L2s are kind of the way that we're going to scale Ethereum. Well, then that opens up the idea of, well, what if we then, move execution out and data availability and all of these other aspects of Ethereum's L1 into kind of separate services, right? Service-oriented architecture. And there's nothing wrong with that. The challenge in any debate between monolithic versus, service-oriented architectures is there's trade-offs. And so, for example, over the course of the past, call it 15 years, with the rise of cloud computing, there was this huge shift in the developer community towards what are called microservices. It's just another implementation of this service-oriented architecture kind of argument that's been around for decades. And microservices took off during cloud computing because you could spin up, a little service or an app, if you will, that all it does is handle, users logging into your website. That's the only thing that it does. Well, the challenge with this is that as your application grows, you end up with thousands of microservices. And so, I've shared this on Twitter before. If you look up, there's an Uber diagram of their set of microservices, and it's massive. So the issue with that is not, hey, this is bad. It's that now you have traded off the kind of simplicity of having everything in one location, a monolith, and having it spread out with hundreds, if not thousands, of different services. And so That trade-off can be the complexity of managing that. It can be network latency, so these services all got to talk to each other. And as that relates to, the debate within L1s, I think you will run into the same trade-offs. It is too early to say, because we haven't really seen evidence yet of loads of applications that have adopted this kind of modular approach. I think there is a good chance that we will see applications adopting it, but there's nothing wrong with one or the other. That it is simply a trade-off. What I do think as it relates to Solana is that if I get back to, again, the developer experience of building on, say, a monolithic chain or integrated chain like Solana, is that as a developer, if I just have one place to focus on to build my application versus I need to tie in with Celestia or this other, cross-chain messaging protocol, or how am I getting execution, or how am I handling scaling, or which scaling solution am I using? Am I toggling between the two? All of those kind of mental gymnastics that a developer has to do slows down their ability to ship an application. And so again, I'm not suggesting that applications won't be built with a modular architecture. I would just argue that the trade-off is going to be how quickly can you get developers to build in this kind of disparate system relative to one where it's, tightly integrated.
So Joe, just from an analogy standpoint, would it be correct to say Solana is trying to be like iOS and Ethereum or EVM is trying to be like Android?
That is probably one of the best analogies how I've explained it. I think my friend Chris Bernisky and his team explained it like that as well. Android is a open source operating system that is adopted by OEMs, right? Anybody can just take the Android operating system and pretty much use it to how they see fit. Whereas, Apple controls up and down not only the software, but also the hardware. And so although Android's market share is significantly higher, Apple's the largest, I think the largest company, or the second largest, it toggles between them and Aramco out of Saudi Arabia, the most valuable company on earth. And their ability to generate high value for this kind of vertically integrated, almost monolithic view is just incredible. So I do think that there is a strong analogy there. But again, hey, Google's doing pretty good too, right? Their business model was, we don't care about necessarily making money on the hardware, where that's Apple's core business. We want people to be using Google search everywhere. So let's just saturate the mobile market with this free operating system that any phone manufacturer can adopt. And now, presto, we've got Google search available there. Again, there's nothing wrong with that. But as it relates to, say, Solana versus Ethereum, or Solana versus any other L1s, I think that kind of holds true, is that Solana is enabling folks to have this kind of tightly integrated, vertically integrated solution that is super fast, dirt cheap, that enables and will enable, and I guess is enabling these kind of, true consumer grade applications to be built on top.
So Joe, I'm going to double click on Solana ecosystem. And one thing I observed was Jump, which is a big market maker, have produced a lot of applications for Solana ecosystem. The Pyth, which is Oracle, FireDancer, which will be a new client, validator client, Wormhole, which is a bridge. So what are your thoughts on that? Like, what do you think that the integration between them and the Solana ecosystem, and what's the end game for them?
Yeah, great question. And so, I'm friends with the guys at Jump. We've done deals together. I think it's important to understand the kind of history of Jump. So Jump is probably the greatest, if not one of the greatest, kind of call it algorithmic and kind of systematic market makers on earth. And they operate in effectively every capital market. And they pretty much make money every single day and have for like 20 plus years, right? They just really don't tend to lose. And the reason is that they have incredibly powerful software and hardware. So a lot of people don't know this about Jump, is that they actually create what are called, custom FPGAs, or, people in crypto may be familiar with what an ASIC miner is, right? It's a miner that's specifically designed. All it does is, mine Bitcoin, for example. They do that for their trading systems. And that vertical integration has enabled them to be wildly successful. They're also a private company. They have no outside capital. No one is invested in them. It's all their own balance sheet, et cetera. And they've done extremely well. And so you say, well, they've got this amazing market making business. Why would they jump into crypto? Well, if you're a market maker, you make money making markets on the spread, right? Well, you can't really do that in Ethereum, right? Uniswap is not a central limit order book, and the spread between what you end up paying in a swap on Uniswap is crazy high, and it's also less frequent, right? So Uniswap, there's no kind of like high frequency or even semi-frequent trading on something like Uniswap. Solana, on the other hand, has the ability, and we've seen this with Serum, which is now, I think it's called Open Book, and myriad others. You've got Phoenix, you've got Cube coming out. These folks that are basically building central limit order books, which is a standard order book for all capital markets. So Jump looks at this and goes, Solana is actually capable of enabling us to make markets on chain. Well, remember, Jump is not in the business of charity. They're in a business to make money. And so their kind of adoption and contributions to the Solana ecosystem, let's be clear, is to make money, right? It is not some sort of charity organization that they're running as it relates to their crypto business. And so what have they done? Well, they've contributed a ton to open source. In addition to that, to your point, they helped kind of spearhead the Pyth network, which is a decentralized Oracle system. Well, why would they do that? Well, because they want to make sure that people are publishing prices that are accurate on chain, that market makers can utilize to publish and trade accurate prices. The Firedancer client, when this was announced, a huge vote of confidence from Jump. If Jump was going to throw in the towel and exit the crypto industry because of what happened in 2022, they would not be working on Firedancer. And so for those that aren't aware, Firedancer is a client that runs right now. The kind of primary client on Solana is the validator client that Solana Labs actually put out. Jito also has their kind of MEV boosted client, and but Firedancer, it has probably one of the smartest engineers in distributed systems and high frequency systems and hardware ever working on it. And this approach that they're taking with Firedancer is consistent with what is really only possible on Solana, is that they are now able to get 10 million transactions per second on commodity hardware. That is truly unbelievable, given the challenges with being able to have that level of throughput on a global state machine of any blockchain. And so their kind of end goal, just to kind of wrap up the thought, is their goal is to make money, right? Their goal is to market make. And I think their view is that you're going to see more and more assets get tokenized, and more of these assets are going to trade on chain. And well, more of these assets are going to trade on Solana because currently it's the only one that can handle this level of throughput. And furthermore, they're investing in making that happen through things like Pyth as well as Firedancer. And one other thing I'll point out is that there's a 2.0 version of Pyth that's going to be coming out soon that is actually a fork of Solana, right? So that they're basically creating an application-specific chain, which there's a myriad of these in the kind of Cosmos ecosystem using Tendermint, but they chose to fork Solana. Why did they do that? Because it's the most performant and high throughput chain out there. And so even the kind of Pyth decentralized Oracle, the 2.0 version when it comes out, is actually a fork of Solana because the tech is that good. And so the point that I'm making is that if the folks at Jump didn't believe in the technology of Solana, they wouldn't be doing any of this.
So, Joe, you mentioned assets. The end goal is to trade assets. So I'm assuming it's more than digital. I'm assuming they are also thinking about the optionality of RWA. So let's double click on this. What do you think about RWA, and what do you think they would be thinking about RWA? How they will be thinking about RWA?
First, as I think about RWAs, I've been in crypto long enough to know that this narrative has evolved and has been kind of pitched for many years. And it turns out that the most successful RWA today is USDC. USDC is a digital version of the US dollar backed by, cash and also ultimately US treasuries. So we actually have, precedence here of how to build a successful on-chain RWA, the US dollar. And I think Circle's done an amazing job, all things considered, with the challenges in the ecosystem, particularly the regulatory environment in the United States, of creating what I would say is the canonical example of how to do real-world assets. Well, what does that mean for other assets? So you could think of, mortgage bonds or corporate credit or gold, or pick some sort of asset that you want to put and tokenize and put on chain. I think that this is certainly possible, but I think it's somewhat path dependent. And I think what's more probable is what you end up with is current large incumbent financial product companies taking their existing products in TradFi that exist today and tokenizing them using a similar model that Circle uses with the US dollar and USDC. So let me walk through an example of what I mean by this. Let's assume that a company makes ETFs. And so you can go on, the NASDAQ or the New York Stock Exchange, and you can just buy and sell these ETFs, right? Well, that's a financial product. That is in some cases, it's a real world asset as an exchange traded fund, right? You can get exposure to gold, you can get exposure to oil, you can get exposure to the S&P 500, et cetera, et cetera, et cetera. Well, those only trade, 5 days a week from 9:30 Eastern time to 4 p.m. and maybe a little bit pre and after hour market trading. And those ETF businesses make money based on the transactions, right? The fees that they collect on people buying and selling those ETFs. Well, why wouldn't they want 24/7 trading then? Like, think about it. If you're an ETF-based company, you're already making money doing, the standard Monday through Friday during regular business hours. But what if you could take those ETFs and tokenize them? And now you have the ability to make even more money because people can trade ETFs 24/7. And in fact, there were some exchanges that did this, I think in 2020, 2021 timeframe, where they started to put, Tesla and the SPY and QQQ, et cetera, on these exchanges. Now, that wasn't on chain, but there was demand for folks that still wanted to trade this sort of stuff. So my view on RWAs is that I think the end goal of we want mortgage bonds and corporate credit and all of these other types of real world assets on chain is path dependent as it relates to the regulatory environment to kind of unlock that. But I think what can push that forward is going to be the incumbent financial product companies that want to make more money with their products by enabling these 24/7, 365 trading environments, which it only can happen right now in a tokenized world.
So, Joe, from a timing perspective, we saw stable coins do really well. So I think in terms, apart from ETF, but in terms of alignment, in terms of timing, which asset do you kind of see next in line that gets tokenized?
Oh man, that's a good question. Well, we have started to see U.S. Treasuries specifically be tokenized, so that is happening. If I had to guess, I would probably lean towards what I was just referring to as the guys that make ETFs. I think that path is going to be easier than, say, somebody trying to figure out how to tokenize oil, or tokenize, mortgage bonds or something. And furthermore, the banks that kind of control these products they're probably going to want to do that anyway. And so they already have a leg up because they already have those types of products. Currently, the banks in the US certainly don't want to touch crypto. So, there is an opportunity for startups to try to go and attempt that. But I think the challenges of getting that done from an operational and regulatory standpoint are challenging. So to me, I think the easiest path is you could see things like tokenized stocks, you could see things like tokenized ETFs that kind of already operate like this, tokenized type product, but they just move them on chain. To me, that just feels like probably the path of least resistance. But I've seen, startup founders pitch me tokenized gold. I've probably seen half a dozen of these pitches. I just think that the incumbent financial product companies are going to do the easiest path of taking what they're already doing and just put those on chain first.
I concur. I kind of share a similar view. I feel like we'll see more quality asset first, and then in terms of risk spectrum, we'll go into the deeper stuff like, let's say, real estate, fractionalized watches. I think Treasury, ETF might come first, then that. So, Joe, what are some of the experiments happening in Solana ecosystem that you're excited about, or perhaps even have invested?
Yeah, so man, there's a lot of really cool stuff happening in Solana. I was told by some of the folks at Solana that I was the original guy to tweet "only possible on Solana," so I will gladly take credit for that meme. I think it's actually the tagline for the current hackathon. So a little back patting for Joe. Some of the things that are truly only possible on Solana are things like dialect. So dialect is a kind of like a messaging app that has the ability for you to kind of mint these NFT based stickers within the chats and trade them, buy and sell them. You can join the community of folks that hold these NFT stickers, etc. And so depending on your view, you may look at that and go like, that's cute, but that's not really all that groundbreaking. Well, if you look at places like Japan, where the app Line has stickers and it's huge, and you look at, WeChat and Weibo in China, stickers are huge. This is, there's some prior art here to suggest that like, actually, this is a sticky way to get people to engage. The difference is that you own the stickers, right? You actually have some level of ownership associated with this. And so what I like about the dialect experiment that is working really well is that it's utilizing a technology that is literally only possible on Solana, which is these state compression enabling these NFTs to be minted in the millions for just a few dollars. Today, there's literally no other chain you can do that on. And that to me is really exciting because we're just starting to scratch the surface of what creative people can do with this new form of technology that applies some level of ownership to the assets that you're creating. Assets, I mean, digital artifacts, if you will. Whether they're NFTs or not is kind of besides the point. So dialect is one that's super interesting. There on the kind of like the DeFi trading side, there's so much interesting stuff happening. So whether it's Phoenix, who's creating a high performance central limit order book, whether it's Jito, who's creating these MEV boosted staking and their liquid staking tokens, that stuff feels like a little bit of the kind of evolution of what we saw in DeFi over the past cycle. But it's important because the difference is that, again, these things just aren't possible on other chains. And so what does that really unlock? Well, we don't know for sure yet, but we do know that, people that are trading assets tend to want to trade quickly and efficiently. And I think that is a powerful thing to do. I think the last thing I'll talk about is as it relates to payments, right? So there's a handful of startups we invested in one called TipLink. Lights out team, brilliant guys that are trying to make it so simple to send people crypto that it's just, through a link, through an email, very, very simplistic way of getting people onboarded into crypto. And this is all powered by Solana. And then on the other end of the spectrum, you've got a big startup called Visa that is now, more or less adopting Solana as the chain that is, worthy of proof of concept for them to apply payments and transactions on chain. And so, if you look at the payments space in general, there's tons of startups, right? There's tons of startups. And then you've got the incumbents like Visa and MasterCard, and then what I would call, a modern incumbent of someone like Stripe. Well, there's something to be said about enabling frictionless payments with something like Solana, because if you're using Ethereum's L1, you may wait multiple minutes and the cost of doing the transaction is not deterministic. So you may not actually know how much it's going to cost for me to send this, this bit of USDC to somebody. All of that just gets abstracted away with something like Solana. So I think those are some things that are super interesting to me right now.
So you mentioned only on Solana, and you also mentioned compressed NFTs. One thing that just came to my mind was DePIN. What are your thoughts on DePIN from an investor standpoint? Like, I know it's a very interesting category. It's very intellectually stimulating. It's a three-sided marketplace. But do you think it's investable?
Yeah, I mean, well, it depends on your outlook and your cost of capital, right? So my friends Tushar and Kyle over at Multicoin, these guys have been out in front of this from day one, and I tip my hat to them for having the level of conviction to be very early to this narrative and be actively investing in it. They've also done extremely well as far as their venture investments and the returns that they've generated, such that they raised another large fund, et cetera. And so a fund like Multicoin, I think, has not only the track record and I would say, institutional knowledge around forming a narrative and a view on DePIN, they've also got the capital to do it. And so, one of the things about DePIN that fascinates me is the approach to, you mentioned the three-sided marketplace, if you will. And we've seen a similar pattern to this about 12, 13, 14 years ago, where you kind of had excess capacity and then demand for that, but it wasn't being met with a kind of a market maker or a marketplace in the middle. And there's tons of examples of this. Uber is one of them. You had black cars sitting there idle and people needing rides. Connect them, right? Airbnb, you've got a second vacation home sitting empty, and you got people that want to rent it. Put them together. I think that people are now comfortable with this concept of leasing out or enabling their excess capacity to be consumed and generating income from it. So it doesn't seem like that big of a leap that would happen with something like Helium or the other, or Hive Mapper, et cetera. These other types of DePIN projects and products, because people are basically saying like, hey, I've got maybe some excess internet capacity. I can offer that up and get paid in this token. Doesn't seem like that big of a leap. One of the challenges for me as an investor is that a lot of these DePIN related startups are hardware startups, and hardware is very hard to invest in because it's very expensive. The capital expenditures up front that are required for a lot of hardware-based startups are enormous. And you have to, I think, have not only a very long view, but also a deep balance sheet or a deep pool of capital to invest and continue to reinvest in a lot of these companies. And again, I tip my hat to the folks at Multicoin, because not only have they done this, but they've continued to do this. So I do think it is investable. I think it's a winner takes most market. You'll probably see this with stuff like Helium and others. Are we actively investing in DePIN? Currently not out of Fund 1, primarily because of the hardware-related thing that I had mentioned. But more importantly, like the early stage stuff that we're investing in is very much just software-specific and developer and infrastructure focused. So long story short, I do think that there is plenty of opportunity in DePIN. I think a lot of them will try and fail, which is this natural state for most startups. But the ones that actually, kind of catch a viral moment, if you will, should be major outsized winners.
Joe, for the last segment of the podcast, it's a rapid fire round. So my first question is, what's your pet peeve in Web3?
Probably a lack of focus on user experience. You have a lot of really talented engineers out there building really cool stuff, but the end user experience it leaves a lot to be desired. So I think that's probably one of my biggest pet peeves is like bringing user-centric design principles to the products that people are going to be using for Web3.
dApp you most frequently use?
I don't know if this is it. I mean, I would kind of qualify this as a dApp, but I use Backpack, which is it's technically a wallet, but it actually, when I talked with Armani, one of the co-founders of it, his explanation was, to me, he was basically doing what effectively WeChat and Line and all these other super apps did back in the early mobile days, which is what they did was the Trojan horse was, we're just a messaging app, but then eventually you do everything in there. You do social media, you do shopping, commerce, etc. Backpack is enabling this, and they have very unique specific features that are basically only available within Backpack, and I use that all the time.
Better tech or better network effects?
I would probably go with better tech, because I think if you have better tech, you have a better chance of better network effects. If you have better network effects and your tech is bad, that network effect may go away.
Last thing you searched on ChatGPT?
Last thing I searched, let me see. This is a good one. Can you please identify the pros and cons of the volatility index 1 day, 3-month rolling beta to the S&P 500? That's how I spend my time with ChatGPT.
Very cool. So a thought experiment with a yes or no answer. A fork of Solana that facilitates L2s on top.
Yes, I'm pro forking.
Joe, final question in one word. Killer use case of blockchain.
Stablecoins.
Joe, it was amazing to have you on the podcast. I learned a lot about Solana ecosystem. And yeah, that's a lot of interesting stuff happening. And you articulated the ecosystem and the tech very well.
Thank you very much. My pleasure to be here.
This podcast is for information purposes only and should not be considered as financial advice. Any opinions provided in this podcast reflect the views of the speakers only.